time to discuss the latest inflation data that we got in today. We got in the PPI, that is the wholesale level. Tomorrow we'll get the consumer price index. These are all inflation prints that are most important. And Brandon Pizzurro is with us, President CIO, Guidestone Capital Management, and Kerim Kfuri is with us, President CEO at Atlas Network. Thank you both for being with us. What's interesting, Brandon, and I've had this conversation, obviously people were happy to see the PPI report today. It was less hot, right? Less inflationary on the wholesale level. But when you look at the full year numbers of 3.3%, it was 1.1% in 2023. So while there's something to celebrate that it came in less than the analyst estimates, is it still worrisome or does it still tell a story? Your thoughts?
Yeah, thanks for having me. It's a great question. You're right. Juxtaposing 2023's annual inflation number of 2024's on the PPI front really is quite a big disparity. I mean, we continue to see that as an issue, as a problem. Inflation remains sticky. It's something that people will continue to look through, obviously, with the CPI report tomorrow. PCE, of course, is going to be the next knock-on, the Fed's preferred inflation gauge. That's going to be something to look at. But you're right. Comparing those two is certainly something that gives a lot of people angst. I think a little bit of the relief rally that you're seeing today, if you want to call it a rally, green on the screen, is just that markets were looking for something stable in the short term, and a little bit of stability we got with this number.
Yeah, Kerim, what do you think? I mean, did you feel okay today? I think people felt a little bit better when they saw it today.
Yes, I mean, I would say that, PPI is definitely an indicator of increased costs for producers. It's good to see a slight uptick, not as large as many of the economists would have seen. But I think it's important as we look at PPI, and this goes back to the supply chain or the production chain, as to what are the fundamental reasons that are driving these cost increases, right? Is it labor? Is it access to materials? Is it the impending ideas of tariffs that are coming along and the market's reactivity to this? And then how will those differences be pushed down to the consumer? And that's what we're going to be looking at for CPI. And we'll have to look at these indices very carefully as we go forward into the future with the new positions in office and so forth. And so that I think that these are very relevant and key times that we have to be looking at these indices very carefully.
Within the report, and I know tomorrow the shelter component is going to be a big one for CPI for tomorrow. Within this report today, which brought obviously some relief to investors to see it coming in less than the expectations, goods prices increased 0.6%. It was pushed by 9.7% surge in gasoline. So it was energy that was still a big component on the upside. So there's still inflationary. On the downside, there was a lot of relief to the tune of nearly 15% for fruits and vegetables or something like that, fresh and dry vegetables. I don't know. Are we putting everything in the basket of that pulling back? You know what I mean? Is that good enough? Brandon.
Sure. I think it's maybe not good enough because in addition to the gasoline prices, which is obviously a huge headwind to the consumer, we know the consumer drives GDP. You also had airfare up 7.2%. If you've been on a plane recently or even in the last couple of years, you see that they're packing those planes pretty full. So consumers continue to want to spend. They want to travel. But with airfare up 7.2%, like you said, gas prices up 9.7%, that continues to be worrisome. I don't think those necessarily net out when you look at those underlying subcomponents. In fact, if you look at a lot of the sell side analysts' street estimates for CPI tomorrow, on the back of this PPI number, which is a little bit of a relief, as we mentioned, you are seeing some of them up their estimates just by a hair on CPI and PCE. So some of those underlying components will probably still be a net headwind or net impact in terms of increasing potential inflation readings.
Yeah, I mean, you still have a pretty good labor picture, too. But, a 7.2% increase in passenger transportation is pretty hefty, right? I mean, you're paying more. Maybe you got a break at traveler accommodations somewhere. Brandon, how do you take this all in? Kerim, how do you take this all in stride now for tomorrow? Do you think the CPI will be hotter or in line or maybe a surprise in a good way?
I think that although PPI and CPI don't always have to be correlated or in lockstep, I think that they will be in many ways in this occurrence. I think that we could expect possibly a slight uptick. I don't think it'll be anything that is significant. But the key factor here, more than anything else, is looking forward into the future. We have many aspects of our economy that are in flux right now, and it's going to be extremely important to look at sort of the costs that impact the production chain and what of those costs can be absorbed by the production chain or what ends up being passed off to the consumer. And that's where we really will see shifts mainly in the CPI. Obviously, if we see some large shifts in the CPI tomorrow or in the coming months, then we know that things are not necessarily going the way that we would like to from an economic standpoint for the consumer at large.
Yeah. How do we see market reaction tomorrow, Brandon?
Yeah, I think markets are going to continue to react with some trepidation, right? If you just look at the tape today, you saw some weakness obviously going in early to mid-morning. You saw a pretty deep red on the screen. As I mentioned, it rebounded back a bit green here today. But markets are just looking for some directionality. There's a lot of things that people are trying to consume. We obviously had a lot of the market run up, maybe pull forward some of that exuberance post-election. But if you look at just consumer sentiment, it's continued to deteriorate since that election day. Still high, but deteriorating down just a bit. But in terms of the conundrum you mentioned earlier with that strong employment picture that we have, sending these higher yields up is something that we have to really concern ourselves with. And those higher yields are really hitting on stock momentum overall. So we need to wrestle with quite a few things, not the least of which, of course, is tariffs that play into this inflation equation. In Q4 alone, Bloomberg's news aggregator had 99,000 headlines that were just speaking to tariffs, which of course far outstrips many years worth of quarterly marks on that. So it's topical for people to think about inflation.
It's great to see you both, and we'll have that CPI for you tomorrow right here on Schwab Network, so make sure you keep tuned in, folks. Brandon Pizzurro, Guidestone Capital Management, and Kerim Kfuri, Atlas Network. Thank you both.